Features of formation. Let's talk about the ownership. Reasons why people would want to create a business. Liability, finance, profit distribution, taxation, and paperwork. These are all features of formation. These are areas that you'll want to consider when setting up your business. What is a corporation and how is that different than the individual? Is there a difference? Or are they one and the same? Is the entrepreneur or owner of a business the same exact thing as the business? Can they be separated? So let's use Erica as an example. She's a graphic designer and she's told her friends and family about that she's started a graphic design business. She does no paperwork to get started. So what type of business formation does she have if she did no paperwork, but she's telling all her friends and family about it? What type of business does she have if she starts working on a logo for a customer in exchange for monetary compensation? I will do your logo for $100. Is she a sole proprietor, a limited liability company, a corporation, or she's not a business yet? The answer is she's a sole proprietor. So if she gets a contract and she's doing work for somebody, she has started her business. And if she's filed no paperwork, she is a sole proprietor. Erica is the same as her business. So Erica, as a sole proprietor, starts a business doing print and web design. And she meets Enrique. Enrique needs to hire a worker to design a menu, signage, and a website for his restaurant. Oh, good. Two entrepreneurs have met each other, and they both need to trade resources. Right? Erica knows how to do graphic design, and Enrique wants to hire someone that does graphic design. Right? And so they set up a contract where they're going to exchange Enrique's money for Erica's services. And they form a contract. That is when a customer and a business do business. A contract or agreement is made between two identities, even if it is not written down. So they formed a contract. Many of us, if we've ever done any business with another entity, have formed a contract, whether we realize it or not. When you go to a restaurant to eat, and the waiter or waitress comes around to take your order, you're creating a contract. You're saying, I want this food and I want it served to me, and I will pay for that food and service when the meal is over, right? You didn't necessarily sign something, but you verbally said what you wanted, and you've entered a contract. You were legally liable to pay for that meal under the terms of the contract. So what are some of the reasons to start a business? You can start it for profit. You can start it for public benefit or nonprofit. You can start a business to reduce the liability that you have when you enter contracts. You can start it to raise funds for your business. You can start it to make money, self-employment. You can start it so that you make it profitable and you can sell it for money. It's oftentimes lots of money. You can share activities with a partner in a formal structure, and you can use it to raise money from investors. Reducing liability. So what are the things that Erica needs to consider when she's entering contracts, when she's doing businesses? One of the main things that she wants to do is reduce her liability. So when you enter a contract, or when Erica enters a contract, one of the parties will be liable for doing certain things. Erica is liable for performing her duties as a graphic designer. Enrique is liable for paying her for those services. So liability is a responsibility for the consequences of one's actions or omissions, enforceable by civil remedy, damages, or criminal punishment. That means if one of the parties fails to complete their part of the contract, they could be sued. They can even be put in jail. So what we want to do is, what are the things that we do in our type of business that have liability, and how do we reduce that liability? In a contract disagreement, it's where one of the parties disagrees that the other party performed the work. So for example, if Erica prints 1,000 menus and all the signs for the restaurant, but misspells Enrique's business name on them, who pays for the reprinting of those materials? Is Erica responsible or is Enrique? And often the question is answered by, it depends. So what happened in this situation when they misprinted the menus? If it's Erica's fault that she did it, even though Enrique told her exactly what the name was, she might be held liable for reprinting them. If Enrique gave Erica the wrong misspelled name and Erica took that name and printed those, then Enrique might be responsible. So oftentimes it just depends. But are there ways that Erica could prevent it from happening? Maybe Erica could have made a proof and sent that over to Enrique and said, can you look this over and can you sign the proof and let me know if everything is spelled right? And on the proof it states, if you sign this contract and anything's misspelled, that you're responsible for reprinting. So she could take steps to reduce her liability in her business. Another example of a contract disagreement: what happens if Erica uses a photo of a child without permission in an advertisement for Enrique's business, and the parents of the child sue for $25,000 in damages? Who gets sued? So there's all these questions. We could go through many of the scenarios between Erica and Enrique's business, but the question is, how do we protect ourselves? Part of what the process of business planning is to identify all the opportunities and then plan so that we avoid failing. Okay? We want to visualize what can happen. We want to experience what can happen. Then we want to take steps to avoid that risk. One way to reduce liability is through incorporation. Incorporation is a way to shield a business from personal liability. It's like a suit of armor that goes over the individual and protects them. A corporation is its own entity, so I actually like to put the suit of armor next to Erica, right? It protects her, but it's also its own entity. It's its own being that can operate without Erica's involvement. So for example, if she hires a manager, the manager can use this protection and operate the business as if it's not Erica herself, but its own entity. So one of the definitions I like to discuss is the definition of going concern. It's a basic business principle that means the company will continue on into the foreseeable future, often past the ownership or lifetime of the founders. So that means Erica can start her business, it can get up and running by itself, maybe she can hire a manager, or maybe even she sells the business and the business will keep going. When a business runs by itself and continues on to the future, that's removing itself from the owner and all the direct actions that it has on it. And it's one way of reducing liabilities. Through incorporation, you can protect the business entity and separate it from yourself so that the business incurs any issues with contract dispute rather than the owner itself. So reducing liability through incorporation is creating a separate entity. And so the relationship with the owner and the company is that of owner. She owns the company. Maybe she even manages the company, but she is not the company. She has separated the company from herself. If her company gets sued, does Erica get sued as well? It really depends. If she was the sole proprietor, she is her own company, so they're one and the same. She would get sued as the sole proprietor, but once she creates an incorporation, a different entity, typically the company gets sued. They would deal with the lawsuit. And again, Erica can manage the business, she can tell it what to do, but if the company gets sued and goes bankrupt, she may not be going bankrupt herself. It's just the company that goes bankrupt and loses all of its assets while Erica can still survive and not be sued. One of the other features of a business is financing the business. This is how a business raises money. A business can raise funds by borrowing money. It could get credit from a supplier. So when it gets the product or services, it can go sell those things, and it might not have to pay their supplier for 30 days, 60 days, 90 days, and in that time, they can go sell that product or service to a customer, and then they can pay the supplier, so they can finance the business that way. They can get an investor that doesn't get paid back as a loan, but gets paid back on the profits. Or they can bootstrap the business where they don't take any money from anyone, and they use any of their jobs and they put them straight back into the business. Another feature that you want to consider when forming the business is how will the profits of the business be distributed? So remember, profits are revenues, all the money that the business brings in, minus all the expenses that the business pays out. Anything left over is the profit. So how does a business, when it makes a profit, how does it distribute that profits to the owners? That distribution will be different depending on the type of business that's set up. So in Erica's example, she's got a business doing graphic design and printing. She brings in $100,000 from her customers as revenue. And she pays out $75,000 to print the menus, to rent the computers, right? To do all the things that it takes to run the business. And she's left over at the end of the year with $25,000 in profits. How do we distribute that profits? As the owner of the company, does Erica get to keep all the profits? How can Erica take the money out of the business? In the United States, there's another organization called the Internal Revenue Service. So often they look at what the profits are for your business, whether you're a sole proprietor or an incorporation, and they look at the profits and they take a share of that as taxes. And those taxes are really important to consider how you want to set up your business and how do you want to protect yourself from paying all of your profits to the government. While that's never the case, you're going to pay all of your profits to the government. There are different ways that your business can be set up that you can save a good portion of the tax that you would have to pay to the government to save that money and either put it back in the business or save it for other types of use, whether it's personal or to reinvest in the business. So taxes are a big consideration of how you set up your business because one entity may be taxed differently than another. So as the owner of the company, how does she pay taxes on profits to the IRS? Largely, it depends on what type of business she has set up. As a sole proprietor, if she operates this herself, she pays taxes through her Schedule C filings on her personal tax filing. That means at the end of the year, when she files her taxes, she adds a different form called the Schedule C, and she talks about what is all the money that she brought in, what are all the money that she spent out as expenses, and this is how much profit she made. And the government will let her know how much she pays on taxes. As an entity or corporation, they may pay taxes differently. But depending on the type of entity she chooses to set up, either she will pay taxes through the company will pay those taxes directly to the IRS, or the amount of profits will be passed through to Erica for her to pay as an individual. Oftentimes, as a pass-through tax corporation, the company will send Erica a letter or a statement that says Erica is the owner of our company and the company made $25,000. She will send that on to the IRS, and then the IRS will tell Erica how much she owes for those profits. So the one thing that's really important to note is that even if the company makes $25,000 in profit, and if the company sends her that form that says the company made that profit as her as the owner, she may be liable for paying those taxes, even though the money is still in the company's bank account. So this is something to consider and talk through, and I encourage you to meet with an accountant because profits are not always cash. So for example, the company may have the cash in their bank account, but Erica is liable to pay the taxes on those profits, and that has to come out of her account. So this is very important. As an owner, you want to be aware of what is your liability for paying those taxes and how do we set it up so we can do it correctly. Oftentimes what happens is the company will send her the form that says the company made those profits, and they will send a check for some amount in order for her to pay those taxes as well. And maybe to take a little bit more to keep as her own, which is usually one of the reasons why you want to start a business, is you want to keep some of the profits for your own. If Erica sets her business up as a C corporation, she experiences double taxation. And I put this in quotes because the C corporation doesn't pay double the taxes that Erica would as a sole proprietor, but the company has to pay the taxes directly to the IRS. But anytime that the company sends her money, she may have to pay money as a distribution of that money. So it's not double the amount of taxes she would have to pay, but there's two ways that the taxes are paid. One, the entity pays directly to the IRS, and then Erica would pay it as an individual to the IRS for any distribution that she takes on that money. Another feature that we want to consider is what is the paperwork required for the business? Paperwork is a simple term, and it may not be a legal term, but it's a simple term for all the legal requirements that a business would have to do in order to start and run a business. So one of the considerations for setting up the business is the country that the business is set up in. And the country is usually run by federal level. So in the United States, the federal level, these laws and regulations govern all 50 states and even some of the territories. So there are federal level laws, there are state level laws and regulations that govern business, and those are based on where the business is set up. And then there's often local area laws and regulations that tell the business how they're going to be running. So often there's confusion on how and what are the requirements to start and run a business. We'll discuss this a little bit more specifically in Module 3 under permits and licensing. But as a general term, we want to understand what is the paperwork and requirements for each type of business. Next up is the specific legal formation and how we form them. Now that we know the features of a business and important things to consider, let's take a look at the different types of businesses that we could possibly do, and let's discuss them in terms of those features.